How are you?
Oh, good, good, good. Glad to be on again and take a look at the market, see what they're going to do here. All right. What I'm looking at is the weekly chart for the SPY right now, and I'll start off with the weekly, and we'll go back to the daily. But I want to show where the weeklies are, and ideally, last week it drew a bearish engulfing pattern, and I'm outlining it in blue right now, and. Bearish engulfing pattern, it actually engulfs the week before, and normally those come at tops. And this one is actually a high volume compared to the previous volume. So volume really jumped up last week and started off above the previous week's high.
Can I just interrupt for a second? So for folks
Sure.
who are looking at the in the den, check on the way back chart. You'll see it. So everything's set. Sorry, I just wanted to interrupt to tell charts are there so everybody can see them. Okay, so continue, please.
All right, so this is a weekly chart, and I want to point out last week did draw a bearish engulfing pattern on the weekly charts. That's where the market starts above the previous week's high and closes below the previous week's low. So it totally engulfs the whole trading range of the previous week. And those things come at, bearish engulf patterns come at highs. And also, we had we had a jump in volume higher than over the last several weeks. And a lot of times, a high volume bearish engulfing pattern, the high of that bearish engulfing pattern is tested. Not always, but most of the time it is. So there's a good chance that last week's high could be touched. And if it's touched on a lighter volume, that could end up with a sell signal. So we'll see how that happens. We haven't quite reached there yet. Market's kind of
So are you consider the engulfing to be your first, like a yellow light, your first warning, right?
Yeah, it's the first warning. Is I think we're made at some sort of a top, none of any major consequence, because as I pointed out last week, we did have a sign of strength back on this day right here, a sign of strength through the previous highs of February, and that was a breakout to the upside, and that happened around 61 or 610 area on the SPY. So we had on the bigger time frame, we broke above the February highs with a sign of strength. Now the February highs will become support, and support around that range is 6,100. So we're probably not going to. We'll test that area probably a couple of different times. So bigger trend is up. Last week's bearish engulfing pattern flips the market at least sideways. So I think we're going to develop a trading range in the coming weeks where last week's high is resistance and the February high is support. And that works out about 6,400 to 6,100. So I think that's where the trading range is to develop, and that's the reason why I draw these blue lines here. So it's going to be a tedious market. You're going to go up, I'll get a sell signal, but not a big down, probably 6,100. But anyhow, that spread from 640 down to 610 is about a
6,100 is a pretty big pullback. I mean, it's nothing to sneeze at.
5%.
You take out 5 or 6 weeks worth of upside action, right?
Yeah, it's worth trading. So if I get a good setup, I'll try to trade it. But right now, I really don't have a decent setup. So, but I'm thinking last week's high is tested. If I get some bearish confirmation up there, if we do test last week's high, I may go short for a downside target around 6,100. I do think 6,100 will find support. Then we may bounce up again. But in general, I think the whole market's going to move sideways probably into October. So that's what I'm seeing. This chart is the SPX tilt ratio. The SPX tilt ratio usually leads the SPY or SPX. And if you notice last week, this is last week's trading range right there. The tilt ratio didn't even get close to the previous highs where the SPX right here did break a new high. So that was definitely a warning sign that if the SPX didn't hit a new high and the SPY did, that's bearish divergence that you're setting up for some sort of a high. So that kind of suggests we're making a high here too, but I don't have a clear signal. Right now, the only thing I can say was we're probably, again, 6,400 6,400 on the SPX is resistance, and 6,100 is going to be support. So I don't have a sell signal yet. I'll have to wait and see how last week's high is tested, and I could end up with a sell signal for a downside target of 6,100. And once we do get 6,100, I'll have to see if we get panic in that range. If we do, I'll probably end up with a buy signal around 6,100 with a target of 6,400. So it's kind of complicated, but that's what trading range do. It's not going to be a continuation market. It's going to be chop. So you're going to have to be careful where you keep your stops, I guess you might say. So that's the equity market. Not a whole lot, but I think October time frame is going to set the tone for another big advance that may be as big from the April low up to the July high. So that's what's coming, but that may not show up until October. But I think it's 6,100. I guess if basically I'm bullish on the intermediate term. If you want to trade this sideways pattern, fine. But in general, there's no top of any consequence here other than a trading range from 6,400 down to 6,100. The bigger trend's up. So you can hold long if you want to.
Okay, so we've got a break coming up. Of course, we want to hear what Tim has to say about the metals, and we'll be right back. Hi, folks. Basil Chapman sitting in for Tommy O'Brien. The Dow is down 276. The S&P is down 15. We're on with Tim Ward. And Tim, the next chart you want to go to? Are you ready to go to the next chart?
I am. And
okay, great.
This is the daily GDX GLD ratio. So it basically
can I just explain to folks, the GDX is the gold miners. Yes, continue.
Right. GDX gold miners and GLD is the ETF for gold.
1/10 the price of gold, right?
Right. So I look at the ratio. So this middle chart right here is the GDX GLD ratio. It's just a daily chart. And what I did was put an RSI to it, and that's the top window here. And the RSI of this GDX GLD ratio, so it's the equity gold stocks compared to the precious metals is what that's measuring. So there's a relationship there, and I do a lot of stuff with momentum, so I put an RSI to it, and I mark the times with red lines all through here, the times when the RSI got above 68. We're actually 71.2 right now, and all those came close to highs, and this chart goes back to 2021. And they all came close to highs or right smack at the highs. And we got an RSI again at 71.2. So we're at some sort of a high. I've been saying that for the last several days. But anyhow, there's another reason why we're looking for a consolidation of gold, because the RSI of the GX daily ratio is above 70. So previous times you get consolidations, you can see them there on the red line. So there's another reason why of consolidation. This is the XAU going back to 1988. Show this chart on Tuesday, and the RSI is up around 74. We're up around 75 right now. Still expect to pull back. It's pretty rare to get these signals. Last time we got a signal came at the COVID high, March 2020. Market consolidated for a number of months. I don't know we'll have that, but I think we'll pull back to around 80, 185 area, 180, given that vicinity. But here's another one, short-term chart. This is similar. If you notice, I got my subscribers out of the gold market, at least on GDX, back in mid-April. And the reason why is because of this chart. This move right here going into the mid-April high was actually parabolic. And we got the same thing going on right now. Market's just really consistent to the upside. And we have the same divergence. The bottom, or this window right here, is a GDX up-down volume with the 18-day average. And the next window higher is a GDX advanced decline with an 18-day average. So it measures the advanced decline and measures the up-down volume for stocks in GDX. And so there's very few stocks carrying this rally, and there's very much, and the stocks that are carrying the rally have a very limited upside volume compared to the previous high back in Looks like about mid-July we had a minor consolidation. Here we kind of exploded up because just a few stocks in GDX exploded up, but the majority of the stocks in GDX didn't really perform. So that, to me, this is a parabolic move to the upside. Parabolic moves to the upside normally end badly. This one back in mid-April didn't do too bad. I mean, it retraced back down to 45 from about 54. I don't know how much this replaced. I think we'll still have a chance to get down to 40. If we don't, we don't. But you shouldn't chase parabolic moves to the upside. So we're basically on a sell signal here. We're actually short a couple of days ago around 55 on GDX. We're at 57 area right now, and 57, 58. But we did get short. I think a minimum downside would be 45. I still think 40 is a possibility. But we'll see how it plays out. But this is not the time to chase gold stocks right now. So I think both the equity market and the gold stock market will actually pull back together is what it's starting to look like. So not a big bear, just a pullback in an uptrend. So I think we'll pull back, maybe again to the April low, possibly to the March low, but that's it. Then the uptrend, in our opinion, will continue to new highs again. So this is kind of a timeout and an uptrend. So been kind of saying that. So far I got egg on my face, but I got quite a bit of evidence that this pullback is still going to happen. So these parabolic moves to the upside are kind of hard to find where the exact high may come, but we're still the fast moves. You have to sell in strength and you have to buy in weakness, and obviously this strength that we basically started off around highball. It looks like about 51. We're up around 57, 58 right now, and that type of percentage move can't last. It's not going to keep going. It's going to find a top and reverse down. So, but the bigger trend's up. All that means is the bigger stocks, which with the stocks in GDX are the bigger stocks, are the ones that probably could consolidate. The small ones are just starting to come to life, and I pointed out on our past interviews what some of those are, and I think those will still perform very well going forward because we haven't reached the speculative market yet in the gold market. That comes at the very end, so that's still in front of us, but the bigger stocks may consolidate. So I don't know, I'm welcome questions. Any questions coming in?
I can't actually see some questions. Makes sense. Gold pulls back with the market. Yes. So the only a question was more a statement than anything else. And that basically says that if the market starts to pull back, very often gold stocks, the metal stocks start to pull back. What I've noticed is sometimes is that if the market pulls back quite sharply, then sometimes what happens is, in order to facilitate and get money, what's done very well, if it's the gold stocks, they start to take profits in the golds. So we'll see. But in the meantime, I'm just thinking there's no geopolitical thing going on right now that should have made a gold and silver spike like this. So there must be something else. And basically, if you're a technician, what you're looking at is that the technicals have been pretty darn good and it's made a very long base. You've pointed that out for quite some time. So,
here's something I want.
Yes, please continue.
But anyhow, here's one support. Basically, if you look at the gold here at the bottom of this chart, gold pretty much has gone sideways here. The big spike in this ratio, if you can see it right here, is because gold stocks have spiked, not gold. So that's the reason why that RSI went up to around 80. So it's too much of a quick move. You want to see actually a gradual move up. But if you see these quick moves where the GDX to GLD ratio jumps up sharply in a short period of time, pushes the RSI above 70, that suggests that gold stocks will correct because that's gone up too fast. And also works just as well as on bonds. If gold stocks go down too fast compared to the price of gold, you find a lot of times bottoms in that, which I didn't label. But anyhow, gold stocks gone up too fast compared to gold, and that's usually a bad sign.
So Tim, I appreciate, as always, speaking with you. Folks, go to Oracle, check out his work. He always puts in every year what he's done. He's done fantastically. So looking forward to your interview on Tuesday. Have a great weekend.
All right. Thank you.